This week, we're talking cattle on feed numbers, and we'll preview next week's reports. Welcome to the weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Kentucky livestock economist Kenny Burdine. Kenny, it is great to see you.
Good to see you.
All right, we'll get into all of that information and this cattle on feed report coming up. But first, let's recap another interesting week in the markets.
Sure. 5 market average fed steer price was down $2.36 this week, coming in at $236.97 per hundredweight. Still would point out, Megan, we're running $50 per hundredweight higher than we were last year. October live cattle futures were up $3.47 this week, closing today at $233.45 per hundredweight. Box beef price was down pretty significantly, down more than $20 this week, coming in at $382.05. That was today, of course. That's about $80 higher than this time last year, but definitely worth pointing out that we were down $20 from last week. October feeder cattle futures gained about $8 from last Friday, closing today at $354.18. Talking through some hog numbers, national base hog carcass price was really unchanged. I think it was down maybe 50 cents, came in at $100.27 per hundredweight. Pork cutout values were 77 cents lower this week, $113.82 per hundredweight. And October lean hog futures just a little bit higher, a little less than $1 higher, closing today at $97.98 per hundredweight.
I think obviously there's what's going on in the cattle markets is really interesting from a lot of different perspectives. Let's start first, a $20 decline in box beef. And I know we're still running well above where we were a year ago, but gosh, they were sharply lower every day this week. And those losses just kind of added up.
Yeah, you're right. You can go back and look at those daily numbers and just trended down day after day after day. This is my take on it. And of course, we had box beef there north of $400 a hundred there for a few weeks, and it almost seems to me like that the market has been so hot, and we have a pretty good feel for the supply side at this point. At least it seems to me like it's kind of almost been looking for something on the demand side, and we can rewind about a week and a half. With the revision of those job numbers, and we had some limit down movement on feeders and big movement down on fats. That's just an example of something that casts some doubt about demand. And I don't know that we know the full impact and how significant it is, but it just kind of plants that seed, right? Is there some concern on the demand front going forward? We had some geopolitical things this past week. Inflation's been a topic for a while. There was some interest rate discussion this week, and the Fed lowered rates. There's been a lot of things going on. So I think all of those things, if you're a trader and you're thinking through this and what's going to happen, I think they do at least cast some question about demand going forward. The other thing to remember is now we're on the back end of September. So we've moved through the seasonal strength in beef markets. We've moved through Memorial Day, Labor Day, and then Memorial Day, 4th of July, and finally Labor Day. So we are at a time when we usually do see some pullback in those box beef and fed cattle values.
It's definitely interesting because I've seen a lot more conversations, whether it's on social media or it's moms who know what I do for a living and are asking questions about beef prices and trying to explain some of it. And we've had this conversation quite a bit. At what point is it too expensive? And do we see a pullback to keep demand steady instead of seeing a protein switch in the retail space?
So box beef is definitely one of those indicators. We get that data a little more readily than we do the retail data, right? But it's a good indicator, and it's always, I think, interesting to watch what box beef does, versus what, say, the pork cutout does, for example. And we're not seeing those two move completely together, which tells me maybe we are seeing some substitution, and that's the way markets work, right? That's how it's intended to work. Those prices are going to the market's going to kind of set those such that we do get movement in both those products at about the pace that keeps the market fairly clear.
All right, let's talk slaughter numbers. No, I'm going to say no real big surprises. I don't think at this point we're 9 months, almost 10 months into the year, and to know what direction both cattle and hog slaughter are going.
I agree. I don't think anything shocking is on the horizon, but cow slaughter for the week is projected, through tomorrow at 552,000 head. That'll be down about 2% from last year, and I always share the year-to-date number, but running about 7.1% below last year-to-date. And like you said, that's running through about the first 8 months. Hog slaughter is actually 3% higher this week, 2.6 million head, and year-to-date running about 2.2% lower than 2024.
And we'll get kind of a updated projection of where the hog numbers are next week when we get quarterly hogs and pigs report out. We'll touch on that coming up in a little bit. But the big report out this week, Kenny, is I also want to add, this is my least favorite month when we do this because the cattle on feed, livestock slaughter, and cold storage numbers are split. So we don't get all of those other indicators that we look for as well. But cattle on feed numbers out today. And there were some really big numbers present in this month's report.
Absolutely. There were some big changes from a year ago. What's interesting is they were largely anticipated through pre-report expectations, and that's not always the case. So we'll just kind of talk through them. We'll start at the top. So on-feed inventory came in just under 11.1 million head, and that's a little under 1% below a year ago, but that was very close to pre-report estimates, extremely close. The August marketings number probably is the one that would get the most attention just comparing it to last year, down 14% from 2024. A big change, but also within 1% of what the pre-report expectations were. And then the placement numbers that we've talked about so much, going back to the last part of 2024, they were down 10% from August of last year, but again, very close to expectations. So the first thing I guess I would say that, the pre-report analysts were pretty accurate. And in terms of this report itself, because it came in pretty close to expectations, I'm going to call it pretty neutral in terms of any impact it might have on the market come Monday.
When we have kind of that neutral impact, but knowing everything that's going on, we're still not importing cattle from Mexico. So obviously that's playing a part in this. How concerning is it at this point for those yards along the southern border? And how much is that disrupting their business also? And how does that play into the whole value and supply chain?
So we're seeing both ends of it, right? We halted getting live cattle imports from Mexico the end of November of last year. Now, granted, we did resume importing for a while, but by this point, that's kind of moved through, right? Those placement patterns have now become marketing patterns. We're seeing that. And, we've talked about it before, just, kind of making an estimate as best I can on how significant that is in terms of total placements. It's somewhere in a ballpark of 4 to 5% nationally. But you hit the nail on the head, right? It's a much larger percentage of those feedlots and those plains, for that matter, in the southern plains, that Texas area in particular. I think it was a couple weeks ago, maybe last week, Charlie did a good job talking through that too. But it's a much bigger concern for them because they've got capacity at a certain level, and they're running below that for the most part in that part of the country.
when we look ahead, when we think about any potential herd expansion, I think when you talk to different producers in different part of the country, it's a different take. October, and not to get too far ahead of things, but October's cattle on feed report is a quarterly, which typically gives us that heifer information. When we're looking at the big picture, there's talk of a potential shutdown as producers are trying to make additional plans for 2026, are starting to think about herd expansion or even some risk management options. Is there concerns that a prolonged government shutdown disrupts a cattle on feed report and not having that not having that crucial information as we're trying to look ahead and move forward?
There is, all of these reports are important, and they help us kind of get a better feel for what's going on. Those quarterly cattle on feed reports, though, are to me even more important, especially when we're trying to gauge, are we seeing any sort of heifer retention? And, the very first thing I do when I get one of those quarterlies, when they come out, is I look at that. I look at the percent of total on feed numbers that are made up of heifers. And, we've been kind of watching that pretty closely now for a year and a half or so. So, you hate to think that you would lose that October report because you would, in fact, get that heifer data there. If we don't get the October, we won't get another estimate on heifers until the January cattle on feed, which would be, 3 months further down the road.
In a time where the ag economy is very segmented right now, things are a lot tougher if you're a row crop producer. A lot better situation for livestock producers. There's a lot of things that are going into consideration for herd expansion. You touched on interest rates were a hot topic this week, but part of I think one of the challenges I hear from producers is the cost of borrowing money, and we've talked about that before too. When you're thinking about these elements of expanding or retention or growing your herd incrementally, what are some things to consider specifically as we're thinking about that cost scenario and whether it's buying bred heifers or it's developing them on your own operation?
Yeah, that's a really good way to frame that, Megan. So, the expansion discussion is out there, but even for basic replacement, right? You've got to make some decisions about, do I want to develop heifers? Do I want to purchase bred heifers? And I think it's easy sometimes to underestimate what it costs to develop your own heifers. You mentioned interest rates, but it's very different doing that in this environment than it was, even 3 years ago, right? With the much higher interest rates. When I talk to producers, a lot of times, they'll look at what bred heifers are selling for, and they're selling extremely high. To be honest with you, they always seem to me like they're selling for a lot, and it's especially true right now. But I think it's easy sometimes to just assume that heifers can be developed in-house for less than they can be bought. And that may be true in a lot of cases, but I think there's some costs that are easy to underestimate. And the first one's the most obvious. I don't think it's a surprise to anybody, but these heifer calves that someone would not be selling because they're going to hang on to them and breed them are worth more than they've ever been. We're, well north of $2,000 in a lot of markets. And that's cost number one. And then you think about not just that cost, but all those development costs, over a period of time combined with, interest rates, it matters. So that's cost number one. The other thing I like to remind folks is that we don't bat 1,000 on heifer retention. If I'm in a setting and I ask folks, okay, you want to replace 10 cows in your herd this year, how many heifers you're going to hold back? The answer is not 10, right? They're going to hold back more than that, knowing they're going to pick from some of those. Some aren't going to breed. Some are just simply not going to like. So, you're going to incur a fair amount of expenses on some of those heifer calves with the intent to develop them that you end up not keeping for cows. And then, the cost of those, you're not going to recoup that full cost most likely when you unload those. So the loss on those becomes an additional cost on those that you do end up keeping. And then the other point I like to make, and this is just a timing thing, and in some markets it doesn't matter that much, but it matters a whole lot now. If I think about a heifer that I wean in 2025 and I keep her, and everything goes well, she's going to wean her first calf in fall 2027. If I buy a bred heifer in fall of 2025, she is bred. She is in all likelihood going to wean her first calf in 2026. So I get a calf a year sooner. And the profit on that calf the next year kind of becomes capitalized in the value or the cost of that bred heifer in the fall of 2025. And although nothing's guaranteed, I think everybody would agree the fundamentals certainly point to a very profitable year in 2026 for cow-calf operations. So that's another thing to kind of think about, is you're trying to compare the cost of developing heifers on your own versus bred heifers. And actually, I swapped some emails with a gentleman this week who, he liked to remind me, hey, let's not forget genetic side too, right? And you've also got to think about, what makes the most sense for you versus developing your own versus bringing in heifers. Are you going to bring in higher quality, lower quality? How does it affect the makeup of your herd?
I feel like right now it's much more strategic, and the conversations need to be more strategic, figuring out this game plan moving forward, because there's a lot of risk and there's a lot of money on the table, regardless of whatever choice you're making. Absolutely.
There's a lot of uncertainty, and there's a lot of digits behind these decisions, right? We're making decisions with a much higher market value than ever before. They're bluntly, Megan, there were some folks that grew their herd too much, or that gave too much for breeding stock back in 2014-15. And, it may have made perfect sense at the time, but I think some of those folks, just look back and think, man, I wish I had that time period back. I wish I had that money back. I would have used it differently. So I think just being deliberate and strategic about how one approaches things in 2025 is probably a good idea.
All right. Before we let you out of here today, livestock slaughter, cold storage, and quarterly hogs and pigs reports are out next week. What do you got?
So I got a lot to talk about next week, it sounds like, but we'll start with hogs and pigs. We just had this discussion about, box beef versus pork cutout, and I think that's, that kind of leads us into this in some sense. The trend lately has been that, we're seeing increases in the inventory of market hogs, but not so much breeding. And I keep thinking at some point, are we actually going to see some additional growth in the breeding herd? And that would set us up for higher pork production levels going forward. So I'm going to be looking at that. Cold storage, of course, is going to give us some sort of, picture of availability of those products. I'm going to be looking at certainly all three meats and what's in cold storage, even product by product. But, I suspect we'll see continued tightening of supplies, especially for beef, but probably also to a lesser extent for pork and poultry. And then, of course, the slaughter numbers that we get next week, that's going to be slaughtered through the end of August. And, we were just talking about using that weekly data. We're running about a little over 7% below year ago levels year to date. So what we'll do is we'll get a breakout of what that means. And I suspect what we're going to find is that steer slaughter's down a little bit. Heifers are down a bit more, and cow slaughter's down again, well over 15% year over year to date. So that's what I'd be expecting.
All right. Well, you will have a great conversation. Just a little editor's note. I'll be out for a couple of weeks. Cullen Havican will be filling in. So he'll have you next week. And then I think Josh is up after that. So I will see you at the end of October.
Sounds good. Look forward to it.
All right. So our weekly livestock market update delivered to your email box every Saturday. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.